I'm Leigh Brown. This is Crazy Shit in Real Estate. And today we have a kind of big deal guest. We have John Bell. He is the Executive Director of Loan Guaranty for the Veterans Administration. So basically, he's right up at the tippy top of that ladder with the VA loan program. And we're going to talk about all things veterans and loans. If you're a realtor, a loan officer, or you know anybody who's ever served, you're going to enjoy this conversation because you might just learn something that will help somebody who has served this amazing country. Enjoy the conversation, and I'll see you on the other side. You're listening to Crazy Shit in Real Estate. You'll be amazed at all these wild but true situations that others have found themselves in. Because on this show, you'll hear uncensored, unbelievable stories from the world of real estate. I'm Leigh Brown. Let's dive right in. I'm so glad that you could join me on the podcast today. We are so excited to have an uppity up from the Department of Veterans Affairs, even though he looks like a regular guy. Today, we've got John Bell. John, I'd love for you to tell the audience a little bit about what you do for the VA. And honestly, I want to know how you landed in that role, because it's probably not every young man's dream to say, I want to work in the Department of Veterans Affairs doing loans.
Thanks, Leigh. First of all, thank you for having me. Such a great opportunity for us to get the word out. And anytime I have the ability to tell the story, and I think it's a really good story of home loans for our veterans, it's a great day for me. So look, I was a lender for a long time, for 15, actually 17 years. And I had a friend in the department, and he had heard me on numerous occasions talk about the inconsistency of the product and how I thought that veterans deserved a little more. And I didn't think that the VA product should be kind of a benefit because they had nowhere else to go, but should be a product of choice for them. And so I answered my calling, and he basically dared me. He said, hey, why don't you put your money where your mouth is and come over here and fix it? And so that's what I did. And so leap of faith. Luckily, I have a very supportive wife that is actually a lender in the industry and has made quite a name for herself over the years. But we made the move to Virginia and haven't looked back. So that was 12 years ago.
Okay, so you're actually that really unique person who has complaints, but doesn't just get on Facebook and type in all caps, the exclamation points, fussing. You actually had an opportunity to come in and make some improvements and sucked it up and did it. I kind of wish more of the world were like that.
Yeah, I am one of those people where if you're going to bring a complaint to me, I want a solution, make a recommendation. And so that's how we have run the VA program since I have been here. And I think it served us well, right? I mean, because I hope we talk about all of the changes that we had to make, not only from an infrastructure standpoint about how organizationally we're run, but also really about technology and process improvement. And, look, when I came on board, the first day I came on board, I looked at a report and it took 30 days, 30 business days for us to issue eligibility. That was the average. We're now doing
that. I mean, when I got in the business 22 years ago, it was easy, planned 6 to 8 weeks, because you had to drive to some VA office somewhere to get that certificate of eligibility. I mean, and that was of course, the pre-internet days. But here in Concord, North Carolina, you had to drive to Salisbury to the VA hospital where there were some offices, or you could drive to Winston-Salem, but you had to go hunt that down. And so that time frame doesn't surprise me at all. But as you and I both know, there are still a lot of mortgage lenders and realtors, let's just say of a certain age, who still think it's going to take all of that extra run-up time because they've not tried a VA loan probably in over 10 years. So I'd love for you to address how you took that gap, because that was insane back then. How did you get that shrunk down?
So first of all, right now, 95% of the time, we're issuing eligibility instantaneous. So the moment the lender hits during your pre-qualification phase, the moment that they hit enter to run your application through, it'll instantaneously give you a result. For those that we are working that it kicks out, we're still issuing those within 2 to 3 business days. So we're right at 100% within that 2 to 3 business day window, which is amazing for our program and has been amazing for our veterans and moving forward. So how did we do that? We talked to our industry partners and we said, what do you need? What part of this process can we fix immediately that'll make our realtors, our agents, our lenders want to use this program more often for our veterans? That was the number one complaint back then. It wasn't appraisals, but it was that. And so we cut down on that first. That was one of our first moves. Then we moved to funding fee. Then we moved to appraisal recruitment, those kind of things. So it's really listening to what lenders, realtors, agents, what are you telling us are the obstacles, and tackling those one at a time. And so that's what we've been able to do.
And oh my gosh, so we could talk about all of those things in different directions, but let's look at today's marketplace, because you do have competition now for VA loans that didn't exist 22 years ago. We didn't have a ton of down payment assistance programs. The bond money was sporadic and even harder to chase down. And so as we've had these challenges in the market with inventory and with affordability, lower down payments really do help people because it allows them to get into a house and helps them preserve their cash for repairs and inspections and surveys and all those things. So with the VA having to compete with other loan types, how would you say you're really working to get veterans to take a look at this program as opposed to anything else? Because I will tell you, I do believe it's one of the best benefits our veterans have. The VA gets a lot of stuff wrong, and we all know that. You don't have to dig deep to find it. We all have things that need to be improved, but the VA loan process program has become the shining star of the veteran benefits. So why should a buyer who has an eligibility from service choose a VA loan over something else? What is your specific reason for that?
Well, first of all, I would say, why wouldn't you? And it all goes back to cost. It goes back to ability to keep money where you want to keep money and use that money for things like when you find that home of your dreams. You know, the first thing you move in and you get wallpaper and you get flooring and you buy a lawnmower for the backyard and all of those things you're putting into the house. If you don't use the low down payment option, you're using credit to buy those type of things. So then you're going further in debt, not just for your mortgage payment, but then also all that stuff that you're buying. The VA allows you to, or gives you that option to use that money for those purposes instead of having to have it all for a down payment, up front. So that's one of the big selling points. The other is the lower cost for the loan. So usually you're paying lower closing costs. Our interest rates are lower than any other product. Matter of fact, I looked again this morning. I look every day, as a matter of fact, at what interest rates VA, where we are at versus everyone else. So you got a lower interest rate that you're paying. Then it's also the protections that come along with it. It's things like VA holding your hand with the servicer when you run up against a financial impact. There are no other programs out there that offer that for veterans. Basically, if they ran up against a financial impact, it would be them and the servicer trying to work it out. They can call VA and VA can help walk them through that process. And we do that. We saved 203,000 veterans last year alone in staving off foreclosure.
When you say financial impact, though, you're talking job loss, you're talking loss of income, change
Loss of income,
marital status, disability, anything that could impact their qualification and ability to make the payment, right?
Exactly correct. Yes, all of the above. So VA's there during the evaluation part of we want to make sure that we know who's going out and inspecting those, not inspecting. I want to stay away from that word, valuing those properties, because the misconception here is that VA makes the appraiser do an inspection on the property. That is not true. They're there for value. If they see things that are big, they're going to call those big things out. We have lender staff appraiser reviewers that are out in the industry. We train them in which to talk to the appraiser and make sure that those minimum property requirements, which every program has a minimum property requirement. The conventional minimum property requirement manual, I think, is like 30 pages. So everyone has these minimum property requirements. And it's things like what are health, safety, and sanitary concerns for those veterans that are moving in. It is not intended to be cosmetic in nature. It's not intended to be a peeling paint on a fence that's in the backyard. That is not what we're meaning when we say a minimum property requirement. It's typically, you got a hole in the roof, you've got exposed wiring, you've got ingress and egress things that are missing there where people could fall and hurt themselves. It's those big things that we should be concerning ourselves with. Sometimes we get caught in the minutia, and we've got to do a better job. And what we've been trying to do is do a better job in training our appraisal network, as well as our listing agents, or the listing agents out there, the buyer's agents, the lenders, to really look and question when those things aren't appropriate, and to escalate those so that we can move on with the process, move on with the transaction, and not let those hinder a veteran from being able to purchase.
Okay, so you obviously knew I was going to ask about this because it's one of the biggest challenges as a realtor representing a veteran using a VA loan, bringing that offer to a listing agent who says, I don't want to deal with that stupid VA repair list. And here's the reason for it. We have things that keep cropping up, like that stupid handrail on 3 steps, which a seller will cure it by buying a 2x4 and making this little jury-rigged handrail just to shut the appraiser up so the veteran can get in the house. And it might be 8 inches off the ground, but it's one of those things that it continually comes up. And because it comes up, and obviously as a realtor, we all know that tends to be the solution. Somebody's going to go put something together, get the inspector / appraiser happy, and then the buyer's going to move in and they're going to pull it right off because it doesn't belong there and it's ugly. And so how do we get past things like that? And the reason I mentioned it, I know that the intention of handrails is safety, but if you're talking a slab house that's got stairs that are about this high, it becomes an impediment, which means the buyer may not even win the house. And so that's been a challenge for us in the last 2.5 years. A seller has this whole package full of offers. They're like, I don't want to deal with making a handrail for this VA. So they toss the offer out and go after the 20% down conventional. And the veteran loses because of what I think is a solvable hiccup in the process. So how do we get the VA people on the ground to think thoughtfully about how each house is independent of other houses? And where I'm going with that is I really wish, because I'm bringing you a solution here, I really wish that if a house were, say, less than 8 years old, it could even receive a waiver from the VA lender who says, this house is still under structural warranty, it's still young, we're not going to put this buyer through those kinds of issues. And I get that we want to protect the buyer, but I also need my buyers to win. Veterans have missed out on a lot of equity in the last 2.5 years because they couldn't win.
So you sound like you're off of my playbook, or actually on my playbook. So look, we are right now going through minimum property requirements and determining what is needed and what is not, what we have the authority to waive and what we do not. And I think that's a fair question. One of the things that we did just about 3 weeks ago is went out with a new policy, basically allowing for a desktop for anything that's where a veteran's putting 20% down, where they can negotiate a desktop appraisal instead of a full appraisal with the lender and the agent. So we also added in that same policy where if it's going to take us 7 business days to make an assignment, so say it's those harder hit areas where we don't have appraisers readily available, then we can actually go straight to desktop and not have to worry about going inside the house. And those minimum property requirements don't hinder a veteran from being able to get into the home. So we did that first because that's policy. That's a lot quicker for us to make some changes on. There are some regulatory things when it comes to minimum property requirements that we have to work through. And part of working through that regulatory issue is getting feedback from the industry as what is needed. Like, what are the things that are, one, preventing veterans from getting into homes that shouldn't be there? And 2, what are things that are there but maybe need to be tweaked because of the way that, some of these regulations and policies were made 30 years ago, right? And they're no longer applicable to this environment and this age.
Peeling paint's a great example, right? So peeling paint is going to be a minimum property requirement that there can't be any. However, lead-based paint went away after 1978. And if there is peeling paint now, it wouldn't have lead in it. And the problem with lead-based paint, as some people know and others need to be educated on, is it comes from ingesting it. So basically, if you have a kid gnawing on the windowsill, that's the problem. But if the house were built in 1990, it doesn't have lead-based paint and probably doesn't have peeling paint, to be honest. But I think there's definitely got to be some room for reason in there. And I want my clients and I want veterans to be safe in the house that they buy, but I want them to be able to get their piece of the American dream too. And it's just been a tricky space to navigate, particularly in a highly competitive market. And of course, as we're moving into a more stabilized market, we are definitely seeing that sellers are now open to VA loans and their agents are now not blocking them. But it does give us opportunity for improvement for the future in so many ways, because at the end of the day, if they're not in the house, they're not going to have the financial stability that homeownership brings.
I completely agree. And it's all about, you also can't just blanket do something for every area as well. And that's one thing that we found out with termites, right? With the ability for the agents and veterans to be able to negotiate who pays for what in that termite process. So you've seen us make some changes in that lately to try to be more competitive. The due diligence fee in North Carolina, there's a like fee like that in Texas, but it's not run the same way as in North Carolina. So North Carolina has this special way it does things. Yeah. And that really affects the appraiser, right, on delivery. And so they got to get it right. And you've got a lot of appraisers out there that are like, what are the steps that you're going to put in place so that we make sure that we're going to hit that time frame? So I think it's all about making sure that we understand individually what our veterans are up against in those local markets and how we can change the program for those areas and not just use one brush to paint the whole program just because it's a federal program. So we're going through all of those different scenarios. I think we've been pretty successful in navigating the due diligence fee as of late. But there's certainly, a year ago, 2 years ago, it really cost us some time frames. And
it's been awful.
Appraiser availability.
If you are remotely awake, then you know that we are heading into some really tricky economic times. We have home buyers that have put the kibosh on buying. We have sellers who have found out suddenly their houses aren't dipped in 14 karat gold. And as a realtor, you are still trying to keep up with the business you have and trying to answer questions in the meantime while also managing sky-high fuel cost at the pump. Never fear, because my new video course is coming out right now, and it's called How to Dominate During a Recession. I've been a realtor for 22 years. My business went up every year during the Great Recession, and it's all because of education. This course is 4 modules. There might even be some bonus content for you. The price is $199. I am delighted to bring this out as quickly as possible because, friends, there's no time like the present to make sure our neighbors are stronger and we protect the American dream. Click on this link, www.dominatethisrecession.com, and I'll see you there. Now, back to this amazing content. Nobody knows how to navigate a market like we've had. It's just been figuring it out as you go. And for those of y'all that are not familiar with North Carolina, the due diligence fee is non-refundable. And so if you've got a veteran who's trying to do a zero down loan because they're trying to preserve their cash, every penny they put out there for due diligence is gone if they don't buy the house. And why they don't buy the house could go back to these minimum property requirements or to the appraisal or anything else. And they're going to be pushed back a year, 2, 3 years, saving back up because that might be everything they had. And we as realtors have had heartburn over it. We've talked to the real estate commission and we've talked to the legislature, what can we do that would help our veterans? And it's just a really challenging space to be in. But speaking of the hoops that they have to run through, you've mentioned appraisers a couple of times here. And as you know, many appraisers are realtor members because they want to really dial in and be a part of the process. I'm a fan of the independent in-person appraisal because the human who's inside the house can give a different valuation because they can consider condition and smells. I mean, a cat house is going to have its own set of issues that a non-cat house won't have. So how do we protect veterans in a loan world that is definitely moving more toward desktop? And I understand the speed angle and I understand the desire to trust algorithms, but frankly, I just don't trust algorithms and AIs like I trust a veteran with eyeballs on a house or an appraiser with eyeballs in there. So how do we navigate that and protect their investment, just like we're talking about navigating the property condition for safety?
So great question. I 100% agree with you. And even in our desktop, the appraiser still has to sign off. The appraiser still has to be the one who initiates, who determines from the information that they get in, that they're the ones that sign off on that value, right? So where VA stands on this is that at the end of the day, we want a certified appraiser that is on our fee panel signing off on value. Now, whether or not they use the tools on how they get to that value, that's what we're kind of in this tryout phase, right? So this is a policy that we can take away at any point in time if our appraisers say, whoa, the real estate industry goes, whoa, or the lenders say, whoa. We can take that away with a stroke of a pen. So this is kind of a pilot type program to see, hey, is this going to work? Is this needed? And, are we going to, are people going to want to use it? Right now, it looks like only around 4% of our entire portfolio would even consider using this desktop piece. So it's really just trying out and understanding, okay, where do we play in this space? Because we just want to give opportunity. We want to give options, tools in the toolbox, if you want to say, the availability for veterans to be able to still utilize this program to its fullest. But again, not getting away from what our bread and butter. And our bread and butter has and will continue to be, hopefully, since while I'm here, on the backs of our appraisers and giving solid value at time of purchase.
Okay, so you're not trying to get rid of real appraisers.
We are not.
Okay, no. Good. I wanted you on the record with that. So good job, Mr. Bell. Good job. All right, let's talk about something else. In veteran world, when a veteran uses their loan more than one time, so let's say that they got pregnant and had quadruplets, woo, we need 3 more bedrooms, we need a bigger house, we want to use our VA loan again. The next time you use a VA loan, the funding fee is pretty steep. Is there any talk on doing anything with that funding fee so that veterans can continue to utilize the program over their own life cycle?
So the funding fee is set by Congress. The VA does not set that. And so we administer it, but we don't set how it's used, how long it's used, and the prices that are set. But I will say, if you still look at the total cost of loan, even if you're saying you're paying the max at 3.65 or whatever, where you've used it, you're now a refinance, you're not exempt, which, by the way, now over 50% for the first time in the history of the program, over 50% of our veterans are exempt from paying the funding fee at all. So when I got here, we were at 28%. We're now at 51%. So that are exempt. We've got a really good track record on helping veterans navigate that. But I will say, if you look at cost of loan with paying a funding fee versus cost of loan for paying MI, mortgage insurance, whether or not it's upfront or for life of loan or both, you're still coming out better with that funding fee than you are the mortgage insurance, with the lower cost of the rate, the lower closing cost, and all that in consideration. We're still on average at around $250 in savings on our average size loan per veteran. So it's a fact that, yeah, there's a funding fee out there. And yes, it increases by the number of times that you've used it. But I will tell you, I've used the program 5 different times over my life. I would continue to use it whether or not I paid a funding fee or not.
So long story short, if we don't like that funding fee, we should call our congressperson and say, how about y'all craft a wonderful piece of bipartisan legislation that would benefit everybody who has served this country? That's what we should do, right?
Those were your words, but I know
I will say that you can't get involved in that. But hey, listeners, this is an easy ask of your congressperson, because I guarantee you that unless they're in a military-friendly state like North Carolina, they're probably not thinking about the VA and the loan program. And so hearing from you as a real estate professional, you might actually give them something productive and positive they could get done in the Congress. And wouldn't that be a benefit to all of us if they could do something really productive and positive? And I know that in North Carolina, we have a lot of really strong congressional delegates who understand it because we are covered up in military here. So I'm pretty sure that would be something that on both sides of the aisle they could get on board with. But let's go back to the group that doesn't have to pay funding fees, because many of my viewers and listeners are early career realtors and they're getting their feet wet and learning parts of the process. Why don't you tell them how somebody can be exempt from that funding fee, because they might not know it?
So there are a variety of ways. If they are, one, disabled, they are due to their service, they are exempt from paying the funding fee. That's the fastest and easiest route of being exempt. And that's where we see the biggest cause for this increase up to 51% being exempt. So if there are any questions at all, please contact VA, which, by the way, I don't know if any of you have contacted VA. Can only talk about Loan Guaranty, but we actually have our subject matter experts that answer phones, and we're answering phones in less than a minute. I don't know of any other agency out there that could probably say that.
It's not.
We take pride in that and ownership, and you being able to speak directly to the expert in which you're trying to get a hold of. So if you're a veteran, if you're an agent, if you're a realtor, if you're a lender and you have questions about the VA, we certainly have our subject matter experts that are there willing to answer any questions that you have. I do want to say to those newer agents out there, or maybe even the borderline agents out there, I think the strength of the veteran profile is tremendously important, because what you might not realize is how much we have advanced. And these veterans can qualify for any loan program out there. They choose VA because of the lower cost, the lower barrier of entry for cost into the program. They could go conventional all day. They've got over 700 credit scores. They've got debt ratios of less than 40%. They meet a residual income requirement that no other program makes them go under. And that is looking at the total debt, whether or not it's listed on the credit bureau or not, versus the gross income that's coming in. So that if financial impact does happen, right, a loss of job, loss of income, those kind of things, they've got a safety net there that they can afford to, a little nest egg that they can afford for a few months to keep making that mortgage payment. And they've got $40,000 in reserves in the bank now, which is the highest amount we've seen for veterans over the years. So all of those speak to very competitive borrower characteristics. And then we're not even going to mention the strengths that our veterans have proven to bring to the communities and the markets in which they work and live.
And I will point out that this is so salient, and realtors, you need to know this. This can be a competitive advantage for you, because one of my preferred lenders, he's a veteran. And whenever we do a VA loan approval, he will also create a conventional loan approval. We send both over with the offer to show the agent and the seller. This buyer can go either way, but they're choosing VA because it's better for them. However, if the seller can't get their mind around that, we could go conventional. And what I have found is that showing agents that they're actually qualified for both allows the seller to say, oh, okay, well, then I can go with this person and I don't care about VA, because that conventional approval gives them a little bit of the mental safety net, even if they don't need it. And so always be thinking about that widening of the opportunity, because it's good for the veteran to look at VA. And until we get all realtors and sellers educated, you got to always educate every single minute you can. So now that being said, I kind of have an oddball question for you. The recruiters for the military, we obviously are looking at the end of the recruiting year coming up here at the end of September. Across all branches of the military, recruitment is way off quota. Do the recruiters talk about access to the VA loan as a benefit as they're talking to 18, 19, 20-year-olds about a career in the military? Because if they don't, they maybe should, John.
Yeah, it is in our package that we, for TAP, which is our training program as they're coming out, as well as it's in the booklets of benefits that we give to them. Now, I don't know if I can speak to directly and every one of them, right? Because every recruiter is a little different, right, on what they choose to market versus what they don't. But I will say if they're not talking about it, why aren't you? Because if I am 18 years old and or actually I was 17 when I went in, but if I was 17, yeah, I wasn't in the market for a home, right? I wasn't even thinking about that. But to know that I can use it over my lifetime and as many times as I want to is a huge selling point for anybody, or should be. So just the idea of having to bring less money down in the transaction, a lower cost loan, and the ability to use it time and time again is a really good story to tell.
So maybe that's one of the things you can do is go put the little word out amongst your peers over in the Pentagon. Tell them to tell those recruiters, hey, go bring this out of your package and don't just leave it in there. All right. So let me ask you a question. Then you mentioned 17 years old, and we know that 17-year-olds can join the National Guard. Do National Guard people qualify for VA loans, or is it only for full-time active duty in the main branches?
Oh, no. National Guard, reservists, active duty, even surviving spouses can utilize the benefit. And if you have questions, again, there's a ton of information on our website, va.gov, search for home loans. Again, call the VA, call your lender, ask your agent. You have access to information. Just ask questions, communicate. I'm sure there are a lot of people out here that want you to ask that question and will be glad to get you the answers.
And honestly, guys, this is where, as realtors, if you're on this program and you're a realtor or if you're a loan officer, part of our job in that initial consultation is to make sure we're asking things such as, have you ever served in active duty in any way, shape, or form? Because so many members of the military don't know this benefit exists. They don't know they have access to it until you start that conversation. So start the conversation so that everybody who stepped up and put on a uniform has access to the benefits that have been created for them, because good gravy, they've earned it. So last thing I'll ask you before I let you go, John, you got to tell us about the wallpaper behind you, because as we discussed pre-roll, it's not a 1980s mafia bathroom tile back there. Tell our viewers and listeners about that wall. If you're listening to this, you've got to go watch the video because it's stunning.
Oh my goodness. So I get the executive bathroom, I get chided all the time. And so this is my home office, and this is actually cowhide. Don't ask me where it came from. I wish that I could take credit for it, but my wife said, this is what you will like. And I said, yes, ma'am. So I am smart enough to figure that out over the years, and hopefully you like it, but it is not tile, I promise.
See, if you thought the VA was just a sterilized hospital room, now you've seen John Bell's personal office with a cowhide wall that's apparently very soft, as he was showing us earlier that you could pet the wall, which I thought was hilarious. See, there we go. And that might be like your touchstone for peace and calm in the middle of a stressful process. But we really appreciate you coming on to give us some information inside the VA loan program. Friends, as you're figuring out how you're going to serve the real estate clients of the future, you have got to know the VA program. So talk to your lenders, make sure they're up to speed, send this episode to them. And whenever you have questions, don't just stop talking about VA. Go ask your questions, get some answers, and start making sure that everybody knows this is available. John, thank you for how you're serving our country through the VA program, and thank you for coming on the show.
Thank you for having me, Leigh. Appreciate it. Thank you. It's been great.
All right, friends, the link to the VA's website is in the show notes for this episode, so you can go click through and find any answers you have. By the way, if you're having a problem with a veteran and a loan, you can either reach out to the VA or call your congressman and talk to the person in constituent services who may have another contact. There's always a way if you'll make the phone call. Thanks for tuning in, and we'll see you next time. As always, I'm so super thrilled that you joined in for more crazy shit. And if you're a realtor, investor, inspector, lender, or just a regular human being who happens to have an unbelievable story that you need to tell the world about, or frankly, you just need to one-up the story you just heard, then make sure to DM me on Instagram at Leigh Thomas Brown, or tweet me at Leigh Brown, or frankly, any social network where you hang out. I'm there. And if you had some fun, then you totally want to subscribe so you don't miss out on any future episodes.